Commonwealth Bank's economics department now has the earliest rate hike forecast, a 0.15% hike in June, followed by three more of 0.25% each this year and one more in the first quarter of next year, taking the cash rate to 1.25%, which is where they say it will stay. Westpac's economists reckon the first will be in August, ANZ say September and NABs say November at the moment. The futures market is much more aggressive. It's pricing for a 2% cash rate in 18 months from now. Now, the reason the CBA's economist is now saying the first hike will be in June is because they think the March quarter CPI in May will be a stinker and will force the Reserve Bank's hand. The Australian dollar remains soft in the face of all these RBA rate hike predictions because American inflation is 7.2% and the US bank economists are predicting 7 rate hikes by the Federal Reserve this year. The oil price rose again last night. Brent crude is now above $96 a barrel. The iron ore price fell a very chunky 5.3% last night, while gold and copper went up. Share markets are still a bit worried about a Russian invasion of Ukraine, although if they really thought it would happen, prices would be falling more than this. The Australian market fell 0.6% today, with retailers up strongly after a good rise in consumer confidence, but energy stocks corrected from yesterday's strong gains. Now, what the Ukraine carry-on is clearly doing is to increase volatility. This is the ASX Volatility Index, which had been trending down since the first wave of COVID ended in June 2020, but it changed direction at the start of this year, both because of rising inflation and because Russia was using the Ukraine border as a parking bay for tanks. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.